Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the morning forecast show live every single morning, normally 2 hours before the opening bell. We're a little bit late today, so I do apologize. We've been working non-stop and that's definitely caught up to me. So please do accept my apologies, but we're live now. I hope everyone's got their newsletter for today. We've got jobs data coming out very, very shortly. So let's go over to this screen here and get ready for it. In 20, wouldn't say it's sorry, let me just change that countdown. That's changed for some reason. Not in 20 minutes. Add another 15 minutes to that. And at 1/2 past the hour, in 34 minutes, we'll be getting the jobs data. Thank you for tuning in. Make sure you hit that like button and please do subscribe as well. Okay, let's go into today's newsletter. Let's open it up. I hope you have all received it. If you do receive it and you get it on the app or the email, you might need to open it up to view the whole thing. Right now, because of all of this new AI stuff going on in people's mailboxes, whether you're using Apple's mail or Google's mail, Yahoo's mail, they put it into different categories. They put it into primary, promotional. You've got all of these different categories. If you do swipe across, and if you do this one time, it'll always come into your normal inbox. If you swipe across and then say move to my primary mailbox, that way it's out of your spam, it's out of your promotions, and it will be in your primary mailbox, so you never miss it. Once you do that once, the AI will realize it should always go to your main mailbox. So I hope you know what I mean. And Google Mail and Mail on Apple, with all these new AI updates, they're putting it into different categories. You can recategorize your mail and put it into your primary mailbox. Anyway, let's make sure this is here. I'm actually going to have to check something for some reason. Bear with me. I have lost the live chat. So if you give me one moment, I'll bring that back up. How's everyone feeling after yesterday's FOMC? Are you bullish? Are you bearish? Let me know who's in the chat. We'll go through the live chat as well. And then obviously we're getting some important jobs data in 20 minutes. I'll tell you what that's all about in just a second. Let me just copy that over there. Who is with us in the live chat? I'm just going to bring the live chat up because for some reason it wasn't there. There we go. Yeah, we do have a poll running right now as well. Did you enjoy yesterday's FOMC as well? Let me know. Okay, look at this. The subscribers just rolled around. You missed it. 107,064. Thank you for each person who subscribed. Please do subscribe if you haven't done so already. Let's go into today's newsletter. Stealth QE merges and the $50 billion gamble. Oh, someone says bearish. Someone's bearish from yesterday's FOMC. It was a strange FOMC, I have to be honest. It was very, very weird. We'll dive into it a bit more in a second. Today's top stories are Mexico targets Asian imports. We've got Oracle, which brought down the market yesterday. We covered it live for you. But yeah, Oracle, massive spending is scaring investors. A $50 billion spending plan tanked the stock amid fears of rising debt. So again, brought the markets down. Oracle, massive AI company. We've got Paramount launches a hostile Warner bid. Remember this whole Netflix deal? Well, that went under. Well, it didn't go under, but then we had Paramount come in now. There's different bids going on. Netflix thought it was a done deal. They even tweeted about it on their own X, and they were wrong. It's not done. And now Trump's getting involved. The Saudis are getting involved. All sorts going on there. So do keep up to date with that story. Remember, all of these stories I explain in more detail below in the newsletter as well. We are 31 minutes away from jobs data. We're going to be getting jobs data. Remember, if jobs data is bad, we can expect more rate cuts. After yesterday's FOMC, the projections are only one more rate cut in 2026. Today's data can definitely change that. Please read the first comment in the chat for me, thanks. Whiskey, I don't have it up, unfortunately. If you want to repost it, let me see if I can find it on this chat over here. You said something about silver charts. Are you a premium member of the newsletter? You can see my exact thoughts on silver. I don't have time to bring up the silver chart right now. If we come onto it, we will. But if you're a premium member of the newsletter, you'll have the chart as part of yesterday's report. If you go into yesterday, remember from the FOMC, we put out a special report, a cheat sheet for all premium members of the newsletter. It had 5 of those charts, and one of them was silver. So Paramount launches, so US Marines sees Venezuela tanker. We've got the Fed doubts official jobs data, and Fed liquidity boosts hides dissent. Let's go into the main part of the newsletter. We've got a few live chats coming in, so let me go over here. Martyn has just said, I'm going to go live a little later today as I'm feeling very down and sad by all the lies and fake disgusting people in the crypto space. It really upsets me sometimes. Well, we're all sending our best wishes to Martyn. It's awful what's going on. It's really, really awful. There's so many people out there in the crypto space, on X, on YouTube, that just spew out nonsense. And because we want to say the right thing, and because we want to debunk that, and because we don't want to just follow a hype train and just get clicks, views, and make money and take corporate sponsorship, people turn on us. And that's what, and we've got, it's not everyone, it's probably just 1% of the people that watch, but it's still very frustrating. A lot of people come into our chat and say, you hate this, you do this to our investments, you pump and dump. We can't pump and dump the S&P 500, we can't pump and dump Coca-Cola, but they still suggest we do. Anyway, I'm not going to get into it, but we do wish Martyn the best. Obviously, he is not feeling very he's feeling down about it all today. But yeah, all we try and do, remember guys, we're not trying to make money off clicks. We just want to do what's best for you. Don't lose hope on XRP. I believe XRP is a star. There we go. Look at this special guest.
Adhovu 4773 donated 49,000 through a super chat. Don't lose hope on XRP. I believe XRP is a star.
I agree. I don't lose hope on XRP. I just don't want to give ridiculous price predictions of $1,000, and because we don't, people turn on us. Anyway, I watched both Sensei and Martyn for FOMC show. Was great. Thanks, guys. If everyone could just leave some positive comments for Martyn. Martyn has done so much over the last 4 years to bring you the truth, and has been so transparent about everything. If you can just leave some positive comments for Martyn, that I'm sure that'll make him feel a lot better. If everyone can just say how Martyn has helped, or how this channel has helped, or just some positive comments for Martyn, and then we'll get Martyn feeling better. If everyone can do that, show him that it's only the 1%. If everyone can do that, that'll be amazing. Show him that it's only the 1% of our haters. The rest of us love this channel. If everyone could just leave one comment, just keep the comments rolling. Martyn will be reading them. That would be amazing. I can't
believe this.
Look at this.
At Styled Cream has become a member.
Thank you for becoming a member. Welcome to the Martyn Lucas Show. Oh, Martyn Lucas Investor Channel. Why is your title clickbait? Bear market capitalist has been hating on the channel recently. What do you mean? Clickbait. We might not get any more FOMC rate cuts. Yesterday, if you looked at the FOMC report, what's now priced in with the dot plot, or not priced in, but what's now projected by the Fed is one more rate cut. After today's data, and if the data is really strong, then there could be no more FOMC rate cuts. I'm going to give you an update on Powell and XRP, and jobs data is coming out. Is it going to be a shock? Is it not? We will see in 30 minutes. It's always a shock to the markets because no one knows. So again, I'm going to have to try and sell the show in one way or another, but I'm not going to create random $1,000 XRPs. This is not, I wouldn't class that as, there's good clickbait, bad clickbait. And obviously, I don't think that's bad clickbait. You two, look, we've got all the positive vibes coming in. We love you, Martyn. You're the man.
This.
Look at this. Members coming in. Everyone loves it.
Pokemon Master Ralphie has become a member.
Thank you very much for becoming a member. Thank you for becoming a star guest on the show. Okay, showtime. Here we go. Sensei, what do you think will happen to XRP? Let's get into it all now. We're getting close to that data coming out. Please do keep those comments coming in. This is one thing people need to start to realize. Bad news is good news. Bad news is good news. I was mentioning this yesterday and it was spot on, and we're going to mention it again as the one big thing for everyone. That was for the premium newsletter. This one, everyone gets the first section of this newsletter. So the bad news is good news paradox. The counterintuitive dynamic currently dominates market behavior. Stocks and the real economy have decoupled because investors now prioritize future liquidity over present growth. The stock market is not the economy. The stock market is not the economy. Bad news is good news. Bad news is good news. Try to get that into your head, because what I mean, in 25 minutes, bad news will be good news. Terrible news is not good news, but bad news is good news. I'll explain that more in a second. Strong economic data. So if we get really strong data coming out in 25 minutes and the jobs market is very strong, no one's losing jobs, that's a threat to the market. It's great for the economy. It's a threat to the market and the stock market and the crypto market. Not the bond market, but the crypto and the stock market. Why? Because it compels the Federal Reserve, Jerome Powell and his committee, to keep interest rates restrictive. If we get perfect data, if we get jobs very strong, they won't cut rates. They will not cut rates because there's no need to. If the jobs market is in trouble, they will cut rates, liquidity gets injected in the market, and we pump. Here we go. We've got Brian with a super chat. Look at this.
At Brianda Lisandio donated £4.99 through a super chat. Martyn, don't be down over bad actors out there. The truth will always win.
This is amazing. Look at this, Brian. Brian has been a long time member, massive supporter of the channel. Sometimes very, very much disagrees with Martyn. It voices his concerns publicly, but we don't mind if people disagree. It's the trolls that we mind. But look at this, Brian, who disagrees with Martyn, has come out and given a super chat to the channel saying, Martyn, don't be down over the bad actors out there. The truth always wins. And there we go. The truth always wins. It might take a while. Some people will deny the truth, but the truth always wins. I will give 10 memberships, says Hong Vu. This is a new member who's just been supporting the channel every day. I will gift 10 memberships. That would be absolutely incredible. We'll wait to see if that happens. Oh my god. You guys are amazing. Good morning, Sensei. We're back in the range. Should we buy? I don't give financial advice. I'm going to take myself off the channel. I'm disappointed. Okay, VC fat cow. Oh, he's done it. He's done it. What on earth? What on earth? Guys, 10 memberships have just been given away from Huang Vu. Smash the like button, subscribe, claim your free membership. Go crazy in the chat. Positive vibes today. We want positive vibes. You've been knocked down and got up again. In a corner, you're surrounded, no defenders. Wow, 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 wow. Guys, please thank him for giving away memberships. Can we just have positive vibes all in the chat? Martyn's feeling down. Let's get the positive vibe going up. Let's show what this community is really about. Let's show how we're different. We all support each other. We give you the truth. People are so generous on the channel, giving away memberships to each other and supporting the channel. Let's go crazy in the chat. Let's have positive vibes today, and let's get ready for the jobs data. Claim your memberships, hit the like button and subscribe. Spread your wings to rise from the ashes.
Get ready for verse 2, electric boogaloo.
We don't have time for trolls today. Everyone's down today. Markets are down. Martyn is down. I'm a little bit down. Let's just get positive vibes in the chat. We're all here together. The markets are down. People aren't happy. We're going to get ready for the jobs data. We're going to provide you with the truth. Let's just keep positive vibes in the chat today. Trolls, you're not welcome. Low tolerance for trolls today. Hong Bu has just said, I will give 5 more. If you want more memberships in the chat, say yes please. Say yes please in the chat. Yes please, and hit the like button and subscribe. Say yes please, Hong Bu. Huang Bu, we want 5 more memberships. Say yes please in the chat. Let's see if he does 5 more. Oh my god, here we go. thank you. Yes, please. Yes, please. Everyone's saying yes, please. Spam the chat. Yes, please. Yes, please. Yes, please. Is he gonna do it? Thank you for tuning into the morning show. We'll see if any more memberships come up. I'm going to turn off the music for now. There it is. You're watching the Morning Forecast Show. In 20 minutes, we get jobs data. Yesterday, we covered the FOMC, and we've got 5 more memberships. Claim your membership. Say subscribe. Hit the like button. We're going to have to go again. We're going to have to go again. We're going to have to go again.
The year is 1991.
Wang Vu 4773, you are a legend.
A young man catches fire. This is Phoenix.
If everyone gives away 1 membership, everyone will be a member. That will be positive vibes all round. If anyone can, I know some people can't, but if some people can, just one. If everyone gives away 1 membership, let's show the positive vibes all around. Claim your membership, hit the like button, subscribe. We'll come on to the jobs data. We just want some positive vibes, so we are just going to celebrate this for a couple more minutes. Here we go.
Like a phoenix, you burst in a fire, burn. A thirst and desire, you transform right up in a flash. You spread your wings.
5 more memberships have been given away.
You burst in a fire, burn. A thirst and desire,
I cannot believe it.
Your wings to rise from the ashes.
5 more memberships have been given away. Oh my god, everyone's going to become a member. C. Marty has just given away 5 memberships. If everyone just gives away a membership, everyone's going to become a member, and we'll turn the trolls, the bad news into good news. Bad news is good news. Let's look at it that way, and I'll come on to that story as well in a second. But let's celebrate this for another couple minutes. Here we go. David Hensley has given away 1 membership. Here we go. Everyone's going to be a member. Positive vibes all around. It's going to be a good day.
Like a phoenix, you burst in a fire, burn. A thirst and desire, you transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn.
I know Martyn is smiling behind the scenes. Let's keep the vibes positive. This is the best channel on YouTube, and you guys know it. Someone asked, how do you give away memberships? Well, look at the chat. It's going crazy. If I move... Oh, David Hensley gave away 5 memberships. Stage Your Life has been a member for... Stage Your Life, I don't think gave a membership, but has been a member for 3 months. Thank you. David Hensley gave away 6 memberships today as well. This is incredible. How do you give away memberships? Well, there's that button right over here. It's got that money symbol where you do super chat, so you can press gift memberships. Comic has given away 1 membership. Oh my god. Guys, keep the chat running. Keep saying yes, please, yes, please, yes, please. We'll do more and more and more. Positive vibes all around, guys. Today's going to be a good day. Becoming a member today. Look at this. Please do, if you win a membership, please do say thank you to the Look at that. Look at that. That's going to make the trolls upset. The trolls aren't going to be happy.
I can't believe this.
Look at all these new members. We love it. Thank you, guys. This is the most honest, most real YouTube channel, media channel out there on YouTube. Why? Well, because Martyn's transparent. Martyn's truthful. We're truthful. We could very easily come on every day and tell you the market's going to the moon. XRP is going to the moon. And if it doesn't, we'll blame it on 50 different things. But we want to be realistic. We want everyone to win. We care about our audience. That's why we go live. Other people make videos. We care about our audience. We go live. We don't have any corporate sponsorship. We don't take corporate sponsorship. But look, guys, you have discovered the best channel, and we will always do our best to provide you with the best, most honest information. If we're wrong, we will tell you we're wrong.
I can't believe this.
Because another 5 memberships given away. Look, Martyn's just said there are disgusting, selfish people in the world, but here the love is everywhere. Look at this, Martyn. Thank you all. I'm in tears. Oh my god, look at this. Martyn was feeling down because the amount of hate. It's a small percentage, but they make themselves very loud, and of course it hurts because all you're trying to do is give the truth. Give the truth. You're trying to take the hard way. And people just bash you down, and Martyn was very upset yesterday and this morning, and now with the power of the Lucasades, we brought each other up. We are now 15 minutes away from the jobs data. Hong Vu has just given away another 5 memberships. It's crazy. Thank you very much. Look at the positivity in the chat today. So many nice comments. I haven't been able to cover them all, but so many comments about why this channel is amazing and how this channel has helped people and why it's the most honest, most real YouTube channel. So many comments up here. I'm sure Martyn has read them all. Let's get on to the news. Thank you, guys. It's a positive day. I've been absolutely shattered. That's why I started the show late and the newsletter came out a bit late. I spent literally, for the FOMC day, 12 hours. 12 hours, multiple people working on the FOMC report, working on behind the scenes during the FOMC. I don't know if anyone noticed during the FOMC report. 20 minutes after the data was coming out, we had full analysis on it. It wasn't AI analysis. This was full behind the scenes
your
analysis.
Life has become a member.
Full behind the scenes analysis coming on. We had that breaking news. We had to implement all of that. I was up in London until 3 a.m. I woke up at 6 a.m., prepared the whole FOMC, and today is the day after, and we've got more jobs data. The point here is to provide you the best, most honest, most real information, and we are trying to deliver on that and get better and better every day. Anyway, let's come on to the jobs data, which is coming out in 12 minutes time. I'm going to just give you all the key pointers now. We just spoke about bad news is good news. What does that actually mean? Well, bad news is good news. We've got someone else giving away 5 memberships. Who is it? It's Bitcoin's Craig. Bitcoin's Craig with another 5 memberships. Claim these, guys. You have to hit the like button, subscribe, and claim these memberships. How do you claim them? Well, I say claim them. You can't actually press a button and claim it. Well, our theory is the more you're engaging with the channel, the more likely you are to win it, because that's what we've noticed. There isn't any, there's no written down way how to claim it. But again, hit the like button, subscribe, be in the live chat, and you have a chance to win these memberships. They're being given away. I think about 25 have been given away today. Bitcoin's Craig, thank you very much. Let me just put the sound effects on and do this for you. Thank you very much.
I can't believe this.
I'm going to have to turn those sound effects down a lot. Okay, so bad news is good news. This is from my very own newsletter. If you haven't got the newsletter yet, it's the first link in the description. Bad news is good news paradox. And this is about 50% of the daily newsletter is actually available for free members as well.
I can't believe this.
The bad news is good news. Going to try and get through this in 10 minutes. This is the new paradigm. Remember, the economy isn't the stock market. We want, as investors, we want liquidity in the market. Oh, sorry about that. We want liquidity in the market. And how do we get liquidity in the market? By rate cuts. We don't want a recession because that's awful. But today is jobs data. Jobs data will show if we've got more people becoming losing their jobs and becoming unemployed. Not good for the economy, not good for those individuals. However, what it means, it would mean that that Jerome Powell and the Fed will come out and cut rates to support the jobs market. So we actually kind of want bad jobs data if you want to invest in the market, if you want the market to go up. So yeah, strong economic data signals. So if we have strong data today, so if we're looking over here where the jobs data will come out in about 10 minutes time, if we've got strong data, we're expecting 220,000. Last time it was 191. This is initial jobless claims. So that means how many people have lost their jobs. If we've got strong data, and that's lower data, if we've got 200,000, 150,000, 50,000, lower than 220,000, that's the main number we're looking at. That will mean not many people have lost their jobs. Oh, look at this. We've got a special guest on the show.
Marty donated £2 through a super chat. Martyn, members Trump trolls every time. Winking
Members
face emoji.
Yeah. I love it. Thank you, C. Marty. The number we're looking at is 220,000. You see that live on the screen there? It's that middle number over here. Yeah, 220,000. Next to it is 191,000. 191,000 is what we got last time. 220,000 is, look at that, 5 memberships being gifted from, I need to pronounce your name better, but Huang Vu. 220,000 is what's forecasted, and what we mean by forecasted is what the market is priced in. So we're expecting 220,000, but it's never the same. If it's below that, that means less people have lost their jobs. The economy is strong. You might think that's great for the stock market, but actually, if the economy is really strong, they don't need to cut rates. We don't get the liquidity. So we want to see that a bit higher. We want to see the economy. It sounds awful, and when I say we, I mean market participants in the market that want the crypto and stocks to go up in the short term. Market participants want to see that number higher. More people lose their jobs means the Fed needs to cut rates.
I can't believe this.
I can't believe it either. Let me turn that off for a second. If it's higher than 220,000, it means more people have lost their jobs. The Fed has to come out and cut rates. Essentially, that's what we're looking for. That's really bringing it down, simplifying it. Now, let's go over to job. A quick synopsis of what happened yesterday was actually $40 billion. That's a number that matters. Why? Well, because announced by Jerome Powell yesterday was the end of QT. That started at the beginning of December. But this is like a secret QE. This is the start of quantitative easing, in my opinion. Regardless of how the Fed called this, they didn't call it quantitative easing. So regardless of the Fed's nomenclature, which is just a word for saying the way they name it, this liquidity injection suppresses short-term yields and compels capital into high beta assets, bearing an unexpected resurgence in inflation. We're looking at money being printed too, and that's essentially QE. They're coming out and buying. We've got some winners and losers. Gemini was up yesterday. We've got PL up. Oracle brought the markets down. I'm just going to go through the newsletter and come on to this part over here, because in 7 minutes' time, we're going to have the jobs data being released. I am feeling unwell today. I apologize. Jobless claims and the Fed reality check. So this is what's coming today. At 8:30 Eastern Time, the Department of Labor releases initial jobless claims. The consensus forecast is a rebound up to 220,000. Thank you, Bitcoin's Craig, for gifting 5 bronze memberships. So the consensus now is 220,000, up from last week's 191,000. Note that last week's low number was skewed by Thanksgiving holiday adjustments. I love it. Martyn said, what did the Fed say they were buying? Well, they were buying short-term treasury bills, exactly what Martyn's been buying for the last couple months. I love it. So note that last week's low number was skewed by Thanksgiving holiday adjustments, and it's not considered a reliable signal trend. A more critical metric to watch is the continuing claims, which is elevated at near 1.95 million. So we're going to get continuing claims. That's the one over here. 1.95 is the forecast, indicating that while layoffs are not spiking, unemployed workers are finding it harder to secure new roles. Remember, we're at this no fire, but no hire. So if people are getting fired, no one is hiring at the moment. That's the dilemma we're in right now. This release follows yesterday's Federal Reserve meeting where the central bank cut rates by 25 basis points to a range of 3.5 to 3.75%. However, the outlook for 2026 turned hawkish. And we've got a full report for the premium members about the fractured cut, stealth liquidity, silent descents, and the tariff gamble. All is in there for the deep dive into yesterday's FOMC. So if you want to get the newsletter, you can go check it out. But yeah, so officials are only now projecting one rate cut. We could only get one rate cut. That is the median result of yesterday's FOMC. One more rate cut in the whole of 2026. While officials, projecting only one rate cut next year. Crucially, Chair Jerome Powell stated that official payroll data is likely overstated by approximately 60,000 jobs per month. So there was two things. So one thing is hawkish next year, only one rate cut, but most people sort of expected that. The other thing that happened in the FOMC, which was pretty important, was two things that Jerome Powell said about the labour market. One was he changed the official statement and made it seem like the labour market is a bit concerning. So that was a bit dovish. I mean, rate cuts will come. Also, he came out and said something very, very, very interesting about 60,000 jobs per month. He said, remember when jobs data comes out a week or so later or a month or so later, we get revisions. We get the real numbers. We get the real numbers. I'm going to have to react to that in a sec. We get the real numbers. And 60,000 jobs per month is what he said he expects the real numbers to come down by. So he's saying the data is wrong by about 60,000 and that there's actually 60,000 less jobs being created and 60,000 jobs more being lost. So that was suggesting that the actual jobs growth may be negative, confirming a no hire, no fire dynamic where companies are freezing hiring rather than conducting mass layoffs. So if claims... So remember, we've just got 10 more memberships getting gifted. I have to react to this. Oh my god. Let's put the music on. Claim your memberships. How do you claim your memberships? Well, as long as you're subscribing, hitting the like button, commenting, engage. 10 memberships have been given away by Huang Vu. Claim your memberships. Positivity in the chat today. Let's see if the markets go up based off positivity. Here we go. Can we get some hype in the chat? Can we get you guys hitting the like button and subscribing? We're going crazy today. 10 more memberships.
Like a phoenix, you burst in a fire, burn. A thirst and desire, you transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn. A thirst and desire, you transform right up in a flash. You spread your wings to rise from the ashes.
Guys, this is incredible, but I'm going to have to cut the music short. We love it. Thank you so much for gifting another 10 memberships. It's absolutely incredible. This is the best family on YouTube. I'm going to have to cut the music short because we are literally 2 minutes away now from jobs data coming out. If claims are above 240,000, that's what I'm going to be looking at. This is probably the first place we're going to get the information. We're looking at 220,000 as the consensus. If we see the number that comes up next to that, above 240,000, it signals a freeze. So it signals the freeze is turning into active layoffs. This is bad for the economy, but it's good for the stock market. Bad news is good news. So it's bad for the economy, but it's good for the stock market, raising the odds of cuts in 2026, because right now the odds are only one more rate cut. And I saw someone in the chat go, well, it doesn't matter, Jerome Powell's leaving and JP Morgan is saying it doesn't matter if there's only one more rate cut, because when the next Fed chair comes in, it's going to be rate cut, rate cut, rate cut. Well, you have to remember, he's only one person. There's 12 people on this committee. One vote can't change it all. He has to do a very, very good job at convincing the rest of the board. So for now, we have to go with that consensus that there's only going to be one more rate cut. If it's above 240,000, it's bad for the economy, good for the stock market because we'll expect more rate cuts. If it's below 200,000, it suggests that the labour market is resilient, the economy is great, and it reinforces that the Fed's slow down message, likely pushing yields higher in 2026 as rate cut bets fade. If the economy is strong, not many people are losing their jobs, there's no need to cut rates. You focus on inflation, no one will cut rates. That's not good for short-term stock market and liquidity boost. We've got a full deep dive about yesterday's FOMC, but now we are 40 seconds away from the data. We're going to fast forward Bloomberg. We are live on Bloomberg, but here's a top tip. If you're already live on the channel, even here, and you're on a desktop, if you go and press the cogs, the settings over here, and then you press playback speed, put 2x, you're actually going to be a bit more live. So we're getting ready for jobs data in 21 seconds. We're also going to be looking at it over here. That's going to be refreshing maybe a little bit quicker than Bloomberg. But now we are 10 seconds away. Here we go. We're going over to breaking news. Here we go.
By 0.5%, Russell 2000 eking out gains, but just. Meanwhile, when you take a look at the bond space, 2s, 10s, and 30s, you do see that bid continuing to strengthen after yesterday's rally. Even at the front end, yes, that has been the biggest rally point.
We're waiting for it to come in any second now.
Up. The 10-year also getting a bid. Jobless claims data just crossing. Bloomberg's Michael McKee has the numbers. Mike?
Well, not just crossing yet. We're a little bit delayed here.
236.
When everybody clicks on the
236. That's good.
Trade balance for
well, it's not amazing, but it's not bad.
Now, negative 52.8 billion. That's a little down from the 59.6. That was the initial report. Now, this includes services as well. Exports up 3%, imports up only 0.6%. No surprises there, given the tariff situation. Initial jobless claims are now in 236,000 last week after a revised 192,000 the week before. That 192, very low, but that was the week of Thanksgiving. So there wasn't a whole lot of people going out to file their initial claims. 236 is much more in the range that we have been in on. Initial claims on a continuing basis, 1,838,000. That is down significantly.
Continuing claims is down.
137,000 the week prior. So it does suggest that at this point, what we're seeing is the labor market in stasis. Not a lot of change, not a lot of people getting laid off. We know that hiring's been weak as well. So the Fed's whole argument yesterday was the labor market needs propping up, but no sign of it right now.
Michael McKee, thank you so much. Taking a look at what the response is in markets, it is further dollar weakening. It is an ongoing bleed lower in terms of the equity indices. Right now, we're seeing Russell's 2000 futures lower after being higher earlier. You're seeing that NASDAQ decline continue.
Okay, so the actual, if you look at the numbers a bit more deeply, we've got continuing claims. Continuing claims is down a lot. So people are actually... less people are actually unemployed now. The continuing claims has dropped, even though the initial jobless claims has gone up. You have to look at the continuing claims as well. That's gone down. So about a mixed message right now. Let's continue looking at the data.
The biggest increase going back to March 2020 in this latest read because of what we just saw in the previous week. How do you understand this?
So I think like this is exactly what Chair Powell was talking about yesterday in terms of like looking for weakness within the labor market. And I think the Fed is definitely leaning more towards let's make sure that
there's no weakness. That's what the data suggests today.
Inflation,
no weakness.
We're going to watch that closely, but the bigger concern is really making sure that we have a grasp on what is happening within the labor market. I think this is largely in line. Yes, it's elevated, largely in line. As you know, one of the things that we're watching very closely is the continuing claims. And so this is something that, you know, if you are someone who did lose your job, how hard is it to find a new job? And how is that going to actually then flow through into areas like consumption?
Continuing claims is down. That's what I just said.
Yes, there are some structural elements when we think through what does this mean from an AI perspective and who are the winners and losers in the employment backdrop. But I think this is something that right now there's no cause for concern. It's like a frozen market. But if you are someone who's out of that market, it's a really, really challenging place to be in.
Yeah, and it's challenging to get a read on this. Blurina Urici of T. Rowe Price joining us now. And Blurina, how do you get a clear read on the labor market when the data's messy, the trends are messy, the structural changes are unclear?
It's all messy right now, yeah.
So I think the story of the U.S. labor market throughout this year has been one of low hiring and low firing. And when you look at the initial jobless claims data today, I think they reinforce this message. We're seeing, yes, of course, a little bit of an increase in initial claims, but if you take Take it within the noise of the last couple of weeks. I think you can smooth out broadly stable initial claims. So we're not getting big flows of unemployed workers in the labor market, but you look at the continuing claims trend that has been moving higher steadily throughout the year, and that's telling you that those workers that came out of the labor market are finding it harder to find a job because the number of vacancies in the economy and the hiring demand from
Full
firms
analysis
has
in a
slowed down
second.
significantly. So it is this kind of labor market. The message for me is that the labor market is not overheated. It's definitely not as tight as it was in 22 and 23, but it's not rolling over either. So this concern that
The labor
Fed
market's
has
strong. The
about
market won't
weakness
like
in the
that.
labor market, I think it's a bit overdone at the moment. And certainly I thought Powell's comments yesterday were extremely dovish with regards to the pace of the employment growth in the economy and this idea that we need to adjust monthly payroll data down by 60K
Two
per
times the
month,
trade went
and
well on the
that's
S&P
true
500.
underlying trend,
You guys
rather
got that
than
as
the
part of the
BLS is
Fed
publishing. I think
cheat
this is
sheet
a bit
yesterday.
of a dovish interpretation of what's happening in the labor market.
Let's stick with that if we can. Far from me to suggest you do some psychoanalysis here of the chairman, what he was thinking in that, and as he thinks about this particular issue. But I'm curious, as we tease this out, why you think he's coming to that conclusion now, what he's buffeting that on. And then I guess I'd love a gut check from you just on the density of the fog that policymakers and economists are operating in right now. Yes, we have these figures, but we're waiting for so many other pieces of and reports of data that have been missing because of the government shutdown. How much are policymakers fumbling as a result of that right now?
Okay, so let's start first with this idea that we should revise down the payroll numbers or not take them at face value when they're being published by the BLS. Where is that coming from? Where when we look at the benchmark revisions for U.S. employment data over the last 2-3 years, it is true that those revisions have been to the downside. And so I think Fed staff has come to the conclusion that there is a downward bias in the BLS estimates. And I think we, as forecasters and economists, broadly agree with that conclusion. I think the magnitude maybe is up for debate. It might be actually smaller than 60K. So I think this is where his assertion is coming from. And perhaps staff estimates at the Fed are a little bit more concerned, they're more negative on the labor market than perhaps the private sector forecasters. And then how much fog is in the data right now and how do we navigate that? A ton of it. Of course, not only do we have this mixed messages from
Sorry about the echo there. I'm not sure what that was. Let's digest this a little bit. It's actually pretty much, we don't have too, it wasn't a shock. So I thought it might have been a shock, so it wasn't a shock. So what I'm going to do is just quickly change that title because it wasn't a massive shock. Let me change that. Now we've got the data. Yeah, so what we've actually got is, if we had, remember when I said bad news is good news, and what I meant is if the economy's strong and there's lots of jobs being created and everyone's got and unemployment isn't going up, that means the Fed doesn't have to cut rates. We wanted to see unemployment up. We want to see initial claims up. We want to see continuing claims up. But what's actually happened is, yes, initial jobless claims was up a little bit, but not up enough. As I said, we were looking at 240,000 and above. That might be interesting. It wasn't. It was pretty much close to consensus. And the other thing you have to look at is continuing claims. That was down quite significantly. So people are entering the workforce again and continuing claims are going down. But nothing significant came out of this data. The S&P 500 has reacted down. The Bitcoin is trying to find support. Nothing major going on based off this report. What everyone's going to be digesting is yesterday's FOMC. And today's jobs data just showed the market is fairly resilient. If anything, it showed that the Jerome Powell didn't have to cut rates. But anyway, let's go back to over here and I'll give you some more information about yesterday. So the Federal Reserve has delivered sort of a chaotic but pivotal 25 basis point rate cut, lowering the target range to 3.5 to 3.75%. While the headline is a cut itself, the real signal for sophisticated investors lies in the machinery beneath the decision. This was not a standard easing measure. It marks the official end of QT and the beginning of liquidity positive reserve management. So underlying, we've basically got the start of quantitative easing, but not really called that, although it basically is. However, the narrative is fraught with risk. Chair Powell faces a crumbling consensus, evidenced by 3 official dissenters and a block of silent opposition within the committee. The Fed is now explicitly prioritizing a cooler labor market, but the data today didn't really suggest the labor market is cooling that much, which Powell admitted may be weaker than official data suggested over sticky inflation driven by tariffs. So he's saying inflation is not really a problem. However, the jobs data is more important. But he said this is what we got today is official data. He's saying if you take the official data, when it gets revised, we're expecting it to be 60,000 less. And if that is the case, then the market can pump on that. It was a very strange comment from Jerome Powell, but he did make it anyway. We don't normally get predictions like that by Jerome Powell. For equity and crypto markets, this creates a volatile but potentially explosive backdrop. A central bank injecting liquidity and tolerating higher inflation to starve off a recession. That's just the introductory paragraph. In today's deep dive, we went into the liquidity pivot, the stealth quantitative easing arriving, the mechanics, the analysis, the flow. We also talked about the shadow, the labor market versus the tariff gamble, the labor market overcount, and especially what he said about the 60,000 jobs per month. We also looked at the tariffs, how you have to look through it, because they're expecting it to be a one-time hit to inflation unless Trump introduces more. The fractured committee, the hawkish check. Remember, you need to look. These are all the key elements from yesterday's FOMC put together in a very concise deep dive. The key elements. One was the liquidity, QE. One was the labor market versus the tariff gamble. That's talking about the labor market and the most important quote of what Jerome Powell said about the 60,000 jobs. Another very important thing was the hawkish check, where one more hawk was added to the list, and that's very interesting. Talking about the market consequence as well, and then the watch list, the repo watch list, the 4.5% unemployment watch list. So I'm going to leave that to the premium members to have a look. The chart of the day was XRP. What we're going to do now is probably go over to the X channel because the morning show has now ended. Let me go over to the live chat, answer some questions. But yeah, jobs data came out. It shows, if it was going to show anything, it's probably showing strength in the labor market, which again doesn't give us a reason to cut rates. But that it wasn't a shock data. It's very, very important to cover these data points because sometimes you get, and most of the time actually, you get a big reaction in the market. However, it was fairly close to consensus. If anything, the market might sell off on it based on the fact that the economy is stronger and they don't actually need to cut rates. Remember, only one rate cut pricing for 2026. Let's read some of these comments. Please don't listen to people charging you $2,000 to be custodian of your crypto, promising insane growth with a completely nonsense qualification you can get online in 10 minutes. That's what Martyn says. But it will be a positive situation. It makes sense. Uncle Martyn says, Huang Vu. Thank you, Huang Vu, for all your super chats and memberships today. Ibrahim Wolf says Bitcoin to 200,000 in 12 months. Yeah, not by the end of the year. Crypto is finished. Nightmare. What happens first? I think Bitcoin will adjust a higher target for 95 to 100,000, I predict. I think it can go to 100,000 before the end of the year. Yep, I think it can do that. The question is, does it hold it or does it test it as resistance and make it a lower high into a bear market? We wait for next year. We do. Next year is the important year. We have a lot of analysis coming up on 2026, and we've already brought some out. What happens first? Martyn to 1 billion subscribers or XRP to 10,000? I love it. Martyn Lucas Investor says this is bad news to the Russell and rubbish companies. Does not affect quality businesses. Remember how the quality businesses grew as the rates were going up. Exactly. Buyers are protecting 90,000 for Bitcoin. That's awesome. Yeah, that's the level of support. Buyers are protecting for now. They can very easily not protect it, but for now they are protecting. $2 XRP seems to be holding well. Yeah, right now we're at 2 levels of support: 90,000 Bitcoin, $2 XRP. $2 is the level that I like to trade. Buy $2, sell higher. But also, if we get one piece of bad news, or if the market starts liquidating, you'll go straight through $2. You'll go straight through 90,000 to your next levels of support. Thank you for everything you do. Be careful. What would it take for XRP to decouple from Bitcoin? It decouples. An altcoin season, XRP decouples from Bitcoin. XRP will outperform Bitcoin. So we have XRP has gone through stages of decoupling with Bitcoin. I think what you're talking about is this idea that if Bitcoin's in a bear market, XRP won't be in a bear market, and for that to happen, it would require time, so maybe 4 or 5 years down the line, and it will require major adoption, and the utility being used. Japan, C Marty, are you still buying XRP? I buy at $2 for trades. I'm not buying for my long-term position. I'm not buying XRP at these levels. I will buy, but my levels are lower than this. I want to buy much lower, in fact. Well, I've got stages. I'll buy at $1.80, 70, 150, $1. Even if it goes lower, I'll buy more. What a waste. If it doesn't pay off, I wasted 6 years. Martyn was right. DCAing didn't pay off. Yeah, okay, yeah. We've done a whole report on DCA versus when you get the money investing, and the data suggests just buy. Just be in the market for as long as possible. However, for most people, you're basically implying two of them. So every time you get money, you're buying the market. That's effectively DCAing. So for most people, I'd say if you just want to make money and forget about the stock market, not trade, just forget about all of this. Go set up a direct debit into a stock market, buy your indexes, low cost, have a diversified portfolio, and just buy every point. But for me, if I've got the money, I buy into the markets. Buy with conviction, and that the data suggests that's better. Great show yesterday. Thank you, Josh Monroe. Thank you, Josh Monroe. Lovely to have you here. Long-time member. Kinzansky is here as well. Japan may have already missed that. Pip, yeah, we're going to cover Japan's Bank of Japan's hike next week as well. I think Martyn will be covering that. Let's see any other comments. Love the remix. I can't believe this in the music. Sounded right on cue. Let's go. 3 more minutes. How's the rate cut? Yes, there was a 0.25% rate cut. That deserves the music again. It did, and we played it. Nice to see that they watch the show. Yeah, okay. We're going to end the show. Martyn will be going live a bit later. What we're going to do is go over to the extra channel now. Let's close this poll. Oh, only 53% of people like the yesterday's FOMC. Oh, no. 24% didn't. And they're probably the trolls. What about your fill orders for XRP? Whereabouts are your fill orders for XRP? There will be in this week's XRP weekly newsletter. And if you ask me again another day, I might show you. But there'll be an XRP weekly newsletter this week. He comes out later online. You can see on the main page. Yeah, Martyn will be back he'll be going live in 2 hours. Thank you everyone for tuning in. Over to the extra channel now. I need to go get some sleep because the last 3 days the preparation for FOMC has been crazy. Yes, thank you everyone for tuning in. Until next time, take care of yourselves and each other. Martyn will be back live in a couple hours. We're going now to the extra channel. Take care of yourselves and each other. Check out the newsletter. That deep dive, everyone needs to read that deep dive. That deep dive will tell you everything you need to know about FOMC yesterday. Very, very important. First link in the description. Take care of yourselves and each other. Bye-bye.